Good morning, everyone. Welcome to our Thursday morning trading room. Bear with me here just a moment. My computer is a little bit slow loading this morning. I will get you my screen so you can see what's going on. As I just finish putting the trade manager on everything. The market's just opened with yet another huge gap to the upside. You know, it's unbelievable. Everybody is watching for the stock indices to head lower, and they just keep on going higher. So here we have, well, let's take a look at the Raptor. We have the NASDAQ here on the Raptor. Here's the overnight session. Well, here, let's show where we finished off yesterday. So we finished off way down here. The market was relatively flat after a bigger decline earlier in the day. So that's the action. Then it hit the skids, went sideways for pretty much the remainder of the session. And then the London Open hit, and all of a sudden the NQ puts in a big rally. Oops, and I see I have a little bit of a problem here with the band on my Raptor. Let me fix that. For whatever reason, my Raptor cloud is not loading correctly, so I need to force it to load. All right. So there's the NQ. Like I said, they made a huge push in the overnight. That's going to look like a really big gap this morning. Everybody and their brother and sister and uncle is waiting for the stock markets to head lower, and they are refusing to do so. So just when I thought, oh, we're going to be sellers today, I'm not so sure. Crude oil also a little bit of a jumbled mess. Oops. Hold on a second here. Just putting my trade manager on my crude oil chart. Okay, and we're working on a possible trend change signal now here in the NQ. Now, obviously, this is a little bit risky to say the least, because the way this is setting up, we don't have our signal just yet, but we have the beginnings of the signal. So here's the down move, here's the up move, waiting for the down move. Oh, okay, that got negated. We'll see if it turns over again. I've mentioned this before. Oops, and here we come with the trend change signal. All right. What I should have done is I should have just thrown in a onesie here. This is not without a fair amount of risk associated with it. Riskiness, not dollar-wise, but riskiness as in is this trade going to work out as planned? And in fact, what I might do is I might increase my profit target a little bit, see if we can't take it down here to this 44, 45 area, which was very problematic yesterday. Wow. Jim says the advanced decline is insanely biased to the upside. 2,000 to the buyer side, only 500 to the sellers. So right now, the market very, very bullish, of course. That is just the opening bell. The thing about tools like advanced decline or a lot of these other tools also is that they do tend to be relative to each other. So what I'm trying to say is, even though the advanced decline, the number itself is bullish, it depends how the market progresses from there. So if the numbers start at positive 1,500 and then trickle down to positive 1,200, positive 1,000, positive 800, that's actually bearish, even though the numbers themselves are still very, very bullish. So if you're watching something like advanced decline or the VIX or one of these other tools, just bear that in mind, that it's not, the number is not absolute. It's bullish or bearish as to how it compares to subsequent numbers. Okay, we're struggling here on the support, just on these lows, not a real big surprise there. I'm fairly confident we're going to see it try to head lower, but this might be the last chance here that I'm going to give the buyers, or sorry, the sellers before I start bringing my stops in. There is a chance we're going to see a test to the extreme here before they fall over. Jim says the Russell is really weak, so we will see whether or not that transfers over into the rest of the stock markets. Mo asks a great question. He says, Eric, can you explain why you mainly follow the NASDAQ? Is there a better trading pattern with that market? It's primarily the tick value, Mo. The NASDAQ is a $5 instrument, which means that it's tradable by almost everybody. Right? It's, as far as tick values go, it's cheap. It also makes some very pronounced moves. There's normally a lot of intraday volatility in the NASDAQ, not so much there at the end of yesterday, but even out of yesterday's open. A lot of, decent runs higher and lower. So that means as a day trader, that's what we're looking for, right? We're looking for a market that makes decent moves and doesn't cost us a lot. Because the NASDAQ is also a $5 instrument, I can usually take more contracts than I can if I were trading a market like the Russell or the E-mini. The E-mini, of course, is $12.50 a tick, so I can take 2.5 times as many contracts with the NASDAQ as I can with the E-mini. Well, why is that important? That just gives me some management options. I'm just taking a single here because it's still early, but if I were trading 2 contracts, well, I could perhaps take profit on one and leave the other in as a runner in case if I'm expecting the market to go a little bit further today. With the E-mini and a smaller account, you're almost always confined to trading just a single contract. And that makes it very difficult sometimes, whether or not you're going to take profit on target all the time, whether you're going to try to leave a runner in. It just makes things a lot more difficult. Now, I realize the E-mini is a huge market compared to the NASDAQ, but dollar for dollar, the NASDAQ is pretty tough to beat. My second choice is the mini Dow, and also because it's a $5 instrument. The mini Dow, however, sometimes can fall flat. It won't be doing that right now. Let me see, where did I put the Dow chart? There it is. Right now, the Dow is very much like the NASDAQ. Here's the Dow on the Raptor. And you can see we're getting some very pronounced moves. This was the Dow yesterday, so pretty much mirrored what was going on in the NQ. But sometimes the Dow, by comparison, will be a little bit more subdued. But even here, you can see there were some decent moves that you could have capitalized on, and it does have the added advantage of being one of these $5 instruments. Boy, we're still struggling with these lows here. So Mo asks, so these two markets are probably better for folks to trade just starting out than the NQ and the YM. Well, yes, they're great for beginners because you can test the waters without risking a whole lot of money. And in fact, speaking of risking a whole lot of money, I think it's time to get more aggressive with my stops. I'm going to go to the parabolics now. But they're even good for seasoned traders because of the ability to trade more contracts. Now, if you're trading a large trading account, say you're trading anywhere from a $50,000 to a $100,000 trading account, then by all means trade the E-mini. You know, you'll still be able to take multiple contracts. The E-mini isn't going to do anything that the NASDAQ and the Dow won't do. They tend to follow each other dollar for dollar. So that means if you see a $200 move in the E-mini, you will get a corresponding $200 move in the NASDAQ and the Dow. So that $200 move might only be 16 ticks in the E-mini and 40 ticks in the NASDAQ, but dollar for dollar, they do seem to match each other. I like it. I think the NASDAQ is a great market all around. Like I said, it has enough volatility in it that you can turn a decent dollar. See, we capitalize on this nice little move here, or, oh, get down there. Don't you dare. Don't you dare. Look at that. They came a tick from my profit target and turned. Who told them my profit target was at 44, 45? Yeah, a lot of folks, they're not even aware of these markets. They think the only market to trade is the E-mini. And of course, that is the king of the hill. Here we go. Get down there now. Don't you leave me hanging again. Get down there. Oh, you guys, you're killing me. Look at that. Just one tick. Just kiss on the mark. There you go. Come on, you know you want to. Micah says, hi Eric, yesterday I was not able to get into the trading room. Was the trade room open yesterday, or is there a different link to the Wednesday room? Yes, remember Wednesdays, every Wednesday, from now until, well, from now until almost forever. Every Wednesday is our open house trading room. And that is a different link. If you don't have that link, I do believe you can find it at the website. Otherwise, you can email Adam directly at adam@indicatorwarehouse.com. And he will give you the link where you can sign up for that Wednesday room. While we're on the subject of rooms, everybody, if I can have your attention for just a moment, this Monday, May the 18th, there will not be a trading room. All right, there should be a notice going out to you, but for those of you who are here right now, a quick reminder, there will not be a trading room on Monday. Just so you know. And Neil makes a good point here regarding the market assortment. He says, I started with the E-mini, then started using you guys and was introduced to the NASDAQ. For me, the NASDAQ is much better, and not just because of the lower dollar value. It's a great market. You know, I was the same. Everybody focuses on the E-mini. I focused on the E-mini. And then one day a friend of mine said, hey, have you ever looked at the NASDAQ? No. He said, you should. And I did, and he was right. I think the icing on the cake was before we did a profit run, and I'm going to forget the lady's name. Oh, darn it, what's her name? She was one of our members. She was down in Florida. And I was trading, I think, the E-mini or the Russell or something else. And she was trading the NASDAQ. And she traded the socks off of me. It was just fantastic. The moves that she was capitalizing on in the NQ, unbelievable. And I think that was the one that tipped me over the edge. That made me realize, yeah, this is a serious market, one that absolutely deserves my attention. All right, so we were concentrating on our little move there in the NQ, but we had corresponding moves here in the Hawk, a very nice follow through off of this first macro cross signal right here. You might have taken this macro pullback. If you took it right on the hash mark, you would have been brought in. The key, of course, to this type of formation is that you need to run your stop relatively deep because of the big trend coming into it. So there were clues here that this was softening. We had two macro pullback signals. And we have one here, another one here. Macro pullback signals, we tend to get two within a trend. Sometimes if the market's trending really strong, we'll get three. Oop, here we go. Got three right here. So that starts to tell me that, okay, the market might be softening. Remember, the macro pullback signal occurs when your micro line goes out of sync. So why is that a weakening signal? Well, it tells me that the market keeps retracing further back and actually twisting the micro line out of sync. Then we get the macro or the red bar buy, which tends to develop near the end of a trend. So this was starting to tell me, yeah, this trend is starting to unwind. And now we're getting our, oh, actually, this was a first micro macro cross signal right here. So if we take it right on the hash mark, which I probably would, I would not risk it above this swing high. I certainly would not risk it to my stop strategy. It's a little bit too aggressive at this point. Neither would I risk it above the swing high of this yellow bar. And the reason is I'm still anticipating some sort of test of the extreme, right? This market is turning over. I got to give this baby some room. This is like turning around a cruise ship. It takes a lot of space to turn around a market that's been accelerating this much to the upside. All right, so they engage us and they pull back. Oh, now, they did end up honoring this swing point, but there was no way to know that when it was happening. And then down they go, and they hit our profit target and come in with another first micro macro cross signal. Yes, you can certainly make a living trading any of these markets, the NQ, the YM, the E-mini. The only time you really need to go to a market like the E-mini is when you start trading huge volume. And by that I mean if you start to get yourself into a position where you're trading 20 contracts at a time, you're going to start slipping the NQ and the mini Dow. Now that that should all be our biggest problem, that we're trading so much volume that, or so much size that we're slipping the market, that we actually have to scale into a position. Once you get to that point where you're trading, 20, 25, 30 contracts at a time, you're going to need to graduate to the E-mini, which will snap those up in a heartbeat. The E-mini will absorb 100 contracts in a heartbeat. You can see here on the Geiger counter, some of the volume that's going through the time and sales. And you see there were 20s and 26s, a lot of 10s, there's a couple 12s. And you see it's not adversely affecting the NQ. Oh, there was a 27. There's a 33. Oh, sorry, I had a sneeze coming on there. Okay, so maybe you can still get by trading 2025s in a market like the NQ without slipping it too badly. But with a market like, if you start throwing in 50s, you're going to start slipping. In fact, why don't we see if it will slip? Now we're on the sim here. I'm going to throw in a quantity of 50. And I'm just going to, well, let me do it this way. We're going to buy 50, and we're going to see whether the NQ is going to slip us. So we'll go in just above the high of that bar. So our order is, here we'll make it 44. Oop, no, they didn't. So I'm not sure. No, I was moving it there, so it's hard to say. It looks like we may have got slipped a couple of ticks, which would not be bad for a 50 lot order. This wasn't a signal, by the way, folks. I was just trying to demonstrate potential slippage. We'll see if it gets back to break even, and I'll punch it out. More of a psychological thing than anything. Come on, get up there. Just one more tick. One more tick. There we go. Okay, so now I can close it out, and I'm still at break even. And Neil says that's good information to know about when to move on to another market because of too many contracts. That's the problem that faces potential traders, actually. Their biggest problem is not so much choosing a direction, because many of them have longer term intentions. But the ones that are in there trying to scalp, and what they do is they call it the ARB, for short for arbitrage, and they're the traders on the floor trying to go in and out for a quarter of a point, or an eighth of a point, or even a 16th of a point. Now, we can't do that. We're not able to trade that quickly, but they trade enormous size, and they literally hop in and out of the market and try to capitalize on a discrepancy in the spread, is what they're doing between the bid and ask. But sometimes they have so much volume that they actually need to scale in or out of a position. Okay, it's almost going to be decision time here for the NASDAQ. Let's take a look here at crude oil on the Falcon. And the market opened somewhere down here, flip-flopping a little bit, tried to give us a trend change signal, got spoiled by the trend line flipping color here, has since come back with a proper trend change signal, and it looks like they probably just reached our profit objective. Oh, just shy of the profit target. They're going to contend with these highs here. They're on the flip side of the primary resistance, but we'll see whether or not they're going to get anywhere. Oh yes, thank you, Jim. Jim's reminding me that it's nearly the top of the hour, and that first half hour of trading very often will establish important areas of support or resistance, at least short term. He says the YM is trading in a very tight spread this morning for that first half hour. So as I mentioned, the NQ in decision-making mode here, trying to decide who's going to win, the buyers or the sellers. So we encountered the hard edge here on the eagle. We've come back with a red bar buy, which tends to be a higher probability signal. I would have let it turn over on the ATR. So we could take it above this high right here. If this fails, however, this is going to be our test of the extreme, and the market will head lower. If you wanted, you could set up a buy order just above here. You could cover it like this. That is a tradable trade. And let's take a look here what else we're getting. Okay, the Raptor might be the first to signal lower, actually coming out of this trading band, the cloud. And this is sort of what we're looking at here, flirting with this bearish trend line. Okay, the hawk is starting to unwind. We're getting a couple clusters of yellow bars. We're seeing a little bit of a failure here also. So the buyers and sellers really at a strong decision point. All right, I'm going to throw that order in because this is obviously the place to buy. We are printing a sell order, or sorry, a warning dot. And this is how this is shaping up. So we'll see whether the buyers get any buying support on the trend line or if the sellers are just going to knock them over here. So here's our red bar buy signal on the hawk. And I might try to throw a runner in here today also. I'm not so sure I'm going to plan to take this one with trend. So in other words, I'm going to set up to sell the failure of it. We'll see if it turns on its heels here. We have had a trade pay off to the downside, to the short side, which does make me more inclined to be a seller today than a buyer. So here's the Raptor coming out of the hard edge. It's funny, our filter was out of sync with this signal. Oh, look at that. And here we're coming back with yet another trend signal. Wow. All right, so this red bar buy did have follow through to it. I didn't think it would. That's why I set up to sell it. We're at a pretty significant resistance area right now. We obviously need to overcome that. And I think I'm going to roll my stop up just a little bit here because right now the buyers are holding the trend line. So if it fails at this swing point, then it's probably going to be time for me to leave. And I think we'll go with the parabolics. There we go. Let the parabolics do their thing. So our Geiger counter, very bullish here at the moment. Come on, get up there. Let's get some more buyers in there. Yes, Neil says, I think you have your Raptor filter set at 10. Yes, I do. I've been experimenting with some alternate settings. So I did speed it up a little bit from the 12, which is the default. Come on, get up there. Let's go. Let's go. Come on. Get on up there. Get me to that break even. Let's go. Almost. Here we go. One more. One more tick. Give it a little push with the mouse. You see the wicks on these candles here? This tells me that there's going to be some aggressive selling or some selling going on here. All right, maybe we'll go with the bar high-low. There we go. Not going to give them too much room here. They're going to either do what I want them to do or go ahead, take me out. Here's an interesting observation from Neil. Neil says, seems like the cloud and filter set at 12, this would be on the Raptor, works best except when it's a trend change. Then the cloud at 8 and the filter at 10 work best. Very interesting observation. Thank you for sharing that. I'm going to play with that a little bit. And Jim says the advanced decline still very skewed, 2100, 2150 to the positive, 660 to the negative. So still about 1500 to the positive. That's very bullish. And so far, so good. We're at break even. We'll get a little bit of breathing room here. There we go. Of course, this big high is going to be problematic. In fact, I might roll my stop in just a bit. No point in being greedy, right? And you can always let your pocketbook be your guide. You know, there's $100 sitting on the table right there. Come on, there you go. Get up there. You can do it. We'll squeeze them hard now. Oh, you guys, I can't believe how they're coming up one tick from the profit objective. There you go. Get up there. Get up there. Oh, whew. Boy, that was hard work. Okay, so let's see now how they respond to the highs up here. The high du jour. Overall, it's been a fairly cooperative day so far. Now this red bar buy down here, normally this is obviously a buy signal. The market seemed to me to have a larger downtrend going on, which is why I was thinking it's going to fail and head lower, which is why I set it up to do something like this. However, with the red bar buy, the other thing you can do is, because it is a lower probability signal, you can look at it and say, if the trade allows me to get in and out before I encounter this trend line, well then maybe I'll buy it up. I did consider that for a moment, but I opted to go with the sell order instead. And yes, you could trade this either way, but of course this one had very good follow through to the upside. Oh, even came back with the first micro macro cross while we were nursing our eagle trade. Okay, still fighting those highs. Jim says the YM hit a lot of stops around the 181.75.77 area. Yeah, that would have been right here near this high. Took a little bit of a hop to the upside. Normally, you see bigger follow through. It's called trapping traders. And what happens is when you identify an important support or resistance level, and always go for the obvious when you're doing this sort of thing. Don't micromanage. But when you see an area like this where there's a lot of market swings, well, where do you think these guys are placing their stop orders? They're putting them right here. Right? They're putting them right above where the swing is. So what happens, do you think, when the market actually trades through there? Well, all of a sudden, all these exit orders, which are buy orders, hit the market. And then you get one of these things going on. So you get the big breakout, the big follow through. Notice there was also a hint that that was going to happen there because we had a similar setup down here. Where are all these exit stops? Well, they're down here. And what happened when the market, oh, and a few more right here. And what happened when the market broke through? Well, it broke through and quickly reversed. So all these sell orders, or sorry, these exit stops were supported by additional buying. So the buyers proved that they were stronger than the sellers at this point right here. That's why I tell you, when you identify a market range, the best course of action is to let it break, retest, and then come back and enter on the retest. That avoids you getting into this type of scenario where you don't really know where the balance of power lies, right? Who is in control? You really don't know. But had you tried to short it here and the market reverses, excuse me, and stops you out, then you can reverse on your position and you can buy with a little bit more confidence. While it's unpleasant incurring a loss, sometimes it does open you up to which direction the market is truly going. All right, so the eagle has since fought its way above this resistance. So it looks like the buyers have total control of the market at the moment. Trade Forecaster says we're in trend mode for about 103 minutes. Good morning, Andrew. Andrew asks, it's been a while since I've been here. What is your favorite chart, the raptor or the birds? Well, I probably do more with the birds. That's not to take anything away from the raptor. It's just that I'm more familiar with the hawk, falcon, and eagle. I haven't spent as much time working with the raptor, so we're still refining some of the secondary signals. And I think with the way I have it set up here, I have my trade manager on the DTS birds and I have the trailblazer on the raptor. So what difference does that make? Well, the trailblazer, it has its own advantages. The chief one being that it's a one-click system. So I can hit the buy market button and I get an order, my stops are in, my profit targets are in, everything is set up. Oh, I'm still trading 50 contracts. I guess I better change that. So that's a nice thing about the Trailblazer. The problem with that, however, is that I can't park an order. So let's say I'm looking at the hawk here, a big run up. Let's say I wanted to take an order above the high and I'm going to risk it like so. I can park my order there and leave it. Now, I suppose I can do a similar thing with the Trailblazer in that I manually enter my order. So I suppose it's not entirely true. I think it's just familiarity with the other three birds. I've spent more time with them. But the Raptor, of course, is a compilation of the other three. So it has elements of the eagle, the falcon, and the hawk. Great question here from Andrew. Andrew asks, are your trades live trades with a live account or sim trades? Okay, these trades that you see in the room, these are live trades on a sim account. Now, everybody says, well, why don't you trade a live account live? Well, we tried that, but the problem is not the problem. The purpose of this room is twofold. This is not a trade call room per se. I do my best to draw your attention to what I consider to be quality trades, but this is also an education room. As a DTS owner, you've made a rather substantial investment in your software. I'm here to help you learn how to use it, not just follow my trades. And for that reason, for those of you who have been in the room any time at all, you know that I'll spend sometimes a lot of time going over what makes a good signal. That's why I always invite and appreciate your questions, because it helps me help you. If this were solely a trade call room, I would not be talking to you. I wouldn't. I would be focused on the charts. When I'm trading, the office door is closed, the phone is off the hook. Everybody knows, don't bother Eric when he's working. I do not answer your questions. I do not even open the question window. If this were a live trade call room, I would say, okay, we're going to buy 44.67 half. We're going to put stops 44.60.50, initial profit target 44.70. And you will have absolutely no idea how I came up with that, why I would consider that to be a quality trade, and so on. Now, some days, I could do both, but for me personally, it's a mindset thing. Now, some people think that's not fair. They think, oh, well, Eric, you wouldn't really trade like that if you were trading a live account. Well, no, I wouldn't. I've already told you that when I'm trading a live account, I am totally focused on what I'm doing. However, I will tell you, I dealt with a fellow who he has a business where he tests trading systems, and there are literally hundreds of trading rooms. And out of these hundreds of trading rooms, only one trader traded a live account. So you consider that. Just 1% of trading rooms, the fellow was trading a live account. Now you might think that is more credible than what I'm doing here, and I suppose you could make an argument for that. But the fact of the matter is that I'll tell you plainly, you ask some other room moderators and they either will ignore your question or they'll just flat out lie in their teeth and tell you, oh yeah, we're trading real money here, but only when they're having a good day. No, it's too difficult for me to educate and trade at the same time. So we do this. These are live trades. Obviously, we're not back testing anything. You're more than welcome to piggyback my trade if you want, but just be aware that this is the other purpose of this room is also to educate you how to use your software, not just alert you to a trading opportunity. So I hope I haven't cheapened what we're doing here, but I do believe it's important to be upfront and let you know that yes, these are live trades, but no, I am not trading real money at the moment. Other people have asked me, well, Eric, then how do you make your money? Well, Adam compensates me for being here a couple hours in the morning. And I also have longer term trades that I look at. I look at position trades. Sometimes there will be some after hours trading. So I appreciate your concern, but I'm doing okay. Thank you. Yeah, like Jim says, how many times have you screwed up on DTS when talking to us? A lot. You can't do both. No, I find it too difficult. And like I said, you know me, sometimes I get off on these tangents where somebody will ask a question that I think, we need to expand on. And that's hard to do if I'm solely focused on just calling trades. Neil is asking, not to be too personal, but are you using the afternoon sessions to make your money? Sometimes, and like I said, sometimes I'll have longer term position trades. Sometimes there'll be a nice opportunity pre-market, and of course Adam does compensate me for hosting the room as well, so it's all covered. What time frame do you recommend for trading the afternoon session? Neil asks. Well, see, it's kind of funny. If we have decent moves in the morning, you probably won't see much in the afternoon. Now, technically, the afternoon session begins at 8:30 Pacific, which would be 10:30 Central, 11:30 Eastern. That's when they break for lunch. If the market has been quiet during the morning, or maybe quiet for the last hour going into the lunch session, it seems like things start to loosen up. So here, let's take a look on the Falcon. We'll go back to yesterday. And all right, so here was the morning session, a decent move, and then we get into the lunch hour, which occurs right about here, and nothing was really going on. They just bounced back and forth, back and forth. You can anticipate that for about an hour. Now, if the session has been very quiet, let's go back another day. Oh, okay, well, this one wasn't bad. We had a run up, and then we get into the lunch. What I'm getting at is sometimes if the session is quiet during the morning, we'll get into the lunch hour, and all of a sudden it'll be like everybody woke up. And the market will start making some rather pronounced moves. If the market has been quiet in the morning, you can almost always anticipate some sort of move to come in the afternoon. So technically the lunch session would begin 9:30 Pacific. That would be or the afternoon session after everybody gets back from their 3 martini lunch would be at 9:30 Pacific, 11:30 Central, 12:30 Eastern. And those are just rough rule of thumbs, and you can look back in your own charts and see it, how, like I say, if it seems to be quiet during the morning, you can almost always anticipate a move in the afternoon. And very often the biggest part of that move will come in the last hour, hour and a half of trading. It's almost as though they wake up and say, oh my gosh, I still have all this work to do. I'd better get these orders in. And then all of a sudden the market lights up. We saw that happen, not so much these last few days, but toward the end of last week, I think it was, where the market was just dead flat during the morning. And then in the afternoon, it actually went somewhere. But in most cases, if you see a rather pronounced move in the morning, you won't see anything in the afternoon. See how quiet they've gotten now? Like, how long have we been working on this bar here in the Eagle? The last bar printed at 7:16, so this bar is 15 minutes old. It still hasn't completed. I don't know what they're waiting on, but they're obviously waiting on something. Maybe lunch. Craig is asking, can you give an example of the time frame of a trade on a long-term, or what time frame would you consider a long-term trade? Hourly or day session? My long-term trades I consider to be position trades, trades that are held overnight. They'll typically run anywhere from a day to a week, but rarely longer. I try not to hold over the weekend if I can help it. Depends on the market as well. Now, there's another thing that is a relative term, position trading. I told you about the person I met a few weeks back who considers themselves a day trader, although they actually don't day trade. They don't trade intraday. They consider themselves a day trader because they placed and exited their orders during the day, but they would only check their positions once a day. So technically, they are not day traders, but I wasn't going to argue the point. The late Scott Berry was a pit trader in the grain pits and the meat pits at the Chicago Board of Trade, and traders in the pits used to consider him a position trader because he would hold a trade sometimes for as long as 5 minutes. That tells you how fast they get in and out of a trade in the pit. If a 5-minute trade is considered a position trade. Yeah, Jim says, hell of a stop loss, eh? Yeah, for sure. Neil asks, how do you change the NinjaTrader chart after daylight savings time? NinjaTrader takes the time off of your computer. That's actually a good thing to mention too. Sometimes people say, why doesn't my chart look like your chart? And more often than not, I ascribe it to the data provider, but sometimes it can be your computer clock also. If your computer clock is off a few milliseconds, it will display the data differently. So normally you don't need to adjust it, assuming, of course, your computer clock is set up for daylight savings time. Which I'm sure it is. All right, crude oil in a little bit of a slide. While I was gabbing, I didn't notice the first micro-macro cross signal that we had here. Nice little trend change, first micro macro cross. It would have been a little unnerving because, well, we don't have the test of the extreme yet. I would have probably tried it, well, yeah, I probably would have taken it on the hash mark, at least ran it up here to the bend in the macro line. But nice progression lower and continued well lower after that. Had a rule of 3 also on the eagle, but the rule of 3 would have been difficult to take real time. Oh no, actually it wasn't a rule of 3. The band was still bearish. I thought that band was bullish. The rule of 3 occurs when you get 3 counter trend signals against your dominant trend. And you determine your trend by the band. So we actually had a rule of 3 to the upside. We had 1, 2, 3 signals print. Right? Here's 1, 2, 3. Buy signals print against a bearish band. So the rule of 3 says you buy the third one. The rule of 3 must be preceded by a test of the extreme. It must have one of those. So you could have gone in, bought, probably covered down there. Oh, look at that. They just came up a tick from the profit target and started to turn. Catching the reversal here would not have been very easy because at this point we've broken a swing high. We would expect 2 moves in the direction of the breakout, right? I would be expecting this signal to fail, the market to turn around, and then come back and produce a buy order and continue higher based on violating the swing point right there. Whenever you violate a major support or resistance area, and once again, always go for the obvious, you can normally anticipate 2 moves in the direction of the breakout. Sometimes you'll get more, but you can usually count on 2. In this case, we didn't get it. In this case, this actually just ended up being a great big bear flag. And as it was printing, that would have been a little bit difficult to see. But there they are all the same. Found their way back to the lows. So crude trading in a much larger trading range at the moment. Jim asked, do you own the Ninja platform or do you lease? Well, actually, Jim, I get a little bit of a perk because I have a business relationship with Ninja. So they allow me to use it. But overall, it's not a bad deal either way. You know, if you've got I believe their purchase now is $1,000, which is not unreasonable. It is a tax deduction after all. But even their lease program is pretty reasonable. Yeah, and there you go too. Jim says, I'm waiting for that yearly sale at $600. And they do run those promos every once in a while, so definitely worth holding out for. Well, the market's gotten dead flat. Oh dear, good thing we picked up on a couple of trades early. even soybeans, nothing's moving today. Well, crude oil, but I missed that move. Everything else going pretty much sideways. We can watch the Geiger counter flip back and forth. That's always fun. You know you're bored when. Yeah, you can see even by the histogram here, we're fairly evenly balanced. Huh, isn't that interesting? Neil says, I'm off by the full hour. My Mac clock was correct, but my Windows parallels were wrong. Ah, there you go. Oh yeah, that's right, because this is a dedicated Windows program, isn't it? I always thought Ninja had one for Mac as well, but I guess not. That's come a long ways too. I know I started on a Mac and went to a Windows primarily because none of the charting programs worked on a Mac, and at the time, the Mac or the Windows software, the Mac software to run Windows was archaic and terribly slow. I know it's come a long ways now. Mo's asking about natural gas. Great. Let's go take a look at natural gas. He says there's a huge spike up. Oh, and that would be, he says, what's the reason for that? Well, that would be natural gas inventory, which is due, I think, at the top of the hour. Michelle asks, are you using version 8 of NinjaTrader yet, or are you still version 7? I'm still on version 7. I tend not to upgrade to the later versions or the newer versions too quickly, because I deal with programmers and I don't trust them. the Sometimes they'll have some bugs and stuff in the new software that you're not totally aware of until a bunch of people start using it. Okay, so here's the natural gas market, and this is on the Eagle. We had a red bar buy signal here. Would have been difficult to take, however. So Mo says we just had a big spike up. So let's take a look at the timestamp. Oh yeah, that unfolded rather quickly, didn't it? Look at that. So from all this developed in the matter of, is that right? That all just exploded in the matter of a few seconds. Now I'll have to double check. It's been a little while since I looked at the natural gas inventory, but let me see what time that is due out. Natural gas storage. Oh, it did come out at the bottom of the hour. So that's what caused that. The way these bars are developing though, you see how tight these day sessions are? It seems to be that natural gas would be a candidate for our alternate settings of 4, 4, and 6. Unless, of course, you wanted to position trade this market. You can still take these signals, just be aware that you may be holding overnight. Let's take a look here at the hawk if it gave any warning before the market exploded. No, not really. Had a macro sell signal going into the report, and then just boom. Let's see whether the Falcon gave us anything resembling a sideways channel, as we sometimes like to do in the crude oil market. Well, I suppose you could have bracketed it this way and this way. And going into the report, where were you? Natural gas, certainly a market that makes exceptional ranges, no question. Oh, what's going on here? That's what's going on. I couldn't figure out why we couldn't see a range there. So here was natural gas prior to the prior to the report. So we did have a tight little range. That one would have made me nervous, bracketing natural gas that tightly. I probably would have gone above the primary support line and below that resistance line. And then they brought you in and took you out, well, depending on your stop strategy. Normally for these types of events, if you're going to play them, I recommend you go with something a little bit more liberal, give you a little bit more staying power, at least until things settle down and you're able to manage your trade a little better. So yeah, that would have been a very nice move to capitalize on. Oh, maybe what we should do, since we're snooping around, is why don't we take a look at okay, let's see here. All right, the stock index is still kind of hovering a little bit. Oh, yeah, I haven't traded natural gas for a while. Mo says the margin on natural gas, the day margin, is 2,000 per contract. Yes, that is crazy. Jim says the buyers are really digging in on crude oil at around the 59.92 level, which would coincide with the low from earlier, from the overnight. Michelle says gold is no longer range bound. I was going to take a look at silver. Let's see. I don't remember if I get silver on this data feed or not. No, I don't. Oh dear. A lot of gunshots going off here. Let's see if I get the big silver. Silver and gold tend to move together. Let's see how the settings are working. Not too bad. So the default settings seem to be giving us enough opportunities that we can actually take some signals here. Oh, that day was a little quiet. Oops, so was that. Might have to, no, that one's all right. Okay, so I'd have to spend a little bit more time day trading silver. But the signals seem to be working out pretty well. Here is a macro pullback signal that had some nice follow through. First micro macro cross signal that had some good follow through. Another macro pullback signal brewing. Silver's not a market that I've spent a lot of time day trading. Let's take a look at gold. Michelle says gold is no longer range bound. It just broke the March and April highs. Woohoo! Gold is a good all-round market. You can trade it practically any time of the day or night. This is gold on the hawk, of course. So the market opens, we get a very nice first micro macro cross with good follow through, a macro pullback signal with good follow through, another macro pullback signal, which also followed through, but should start to tell you, two macro pullback signals. Maybe I should be a little bit more cautious. And now we're in a little bit of a tailspin. No doubt we'll get some buyers showing up probably here around 1220. Amazing, $1,200 for an ounce of gold. It wasn't that long ago, gold was, well, it doesn't seem that long ago, that gold was trading at $300 an ounce and I was shorting it. I was shorting it to go lower than 300 an ounce. Where's the NASDAQ? There you are. And it did go lower. Well, you guys are at the top of the hour here. Oh, there you go. Joe's probably nailed it. He says, Draghi's about to speak. I wonder if he's going to say anything that we don't already know. That's no doubt why the market has fallen so flat. Yes, you're right. That's at 11 a.m. So that's coming up here in a moment. No doubt the euro will react one way or the other. A couple minutes yet. We'll see if things shake up. Otherwise, I think we're going to shut down the room a little early. All right, well, okay, 1 minute to go. Hoo-hoo! Sorry, I was... Oh, way to go. Joe says he's got a long position in the NQ. Joe's also asking if I have any private coaching available. I do have a couple of time slots left. You can actually find out about that at Indicator Warehouse. Let me get you the link for that. So if any of you are interested, that would be the link that you can follow. And yes, and Mark, I did get your notice, and yes, I'm going to reply to you today. Mark booked some coaching time with me. Unfortunately, I had no time to meet with him yesterday. Michelle asked, Eric, do I just go online and buy the hours and then we schedule it? Yes. Or if you like, we can schedule first, but yes. And I will do my best to accommodate whatever your time frame is. And yes, Mark, I will be getting back to you today, I promise. In fact, I made myself a great big note and I'm circling it in red. All right, the NQ heading a little bit higher there. That'll be good for Joe if he's still riding the wave. Oh, the market hypnotized me here. I didn't even notice this macro pullback signal printing. Ooh, this looks bad. This is when I was trading 50 contracts. Yeah, we'll just turn that off. I find the people always ask me, Eric, why don't you leave the profit loss up? Because I find it distracting. You might be okay with it, but I like it to be a bit of a surprise. At the end of the day, I'll turn it on and say, oh, that was good, or ooh, that's not so good. If any of you are writing me for coaching, when you write, if you can let me know what time zone you're in, which is always helpful, and if there are any times or days which work better for you or don't work for you. crude oil starting to recover a little bit. And the NASDAQ actually fairly subdued. And now everything's going flat again. Well, okay, we'll take a look here. Yeah, Jim says, I think a test of the 10 a.m. low is in order. I'm surprised, quite frankly, given yesterday's session, given the long-term outlook on these markets that we're still seeing them rally as hard as they are. I'm a little skeptical, truth be told, about the NQ heading higher, but it is obviously in an uptrend. If it gets below this 10 a.m. low area, this 44.64 area, if we get below here, yeah, we could see it slide all the way down here back to the lows. I don't doubt that for a moment. Michelle is asking, Eric, can you go over how you do the training sessions? Basically, the training sessions are your time. I don't have a real set agenda. I try to tailor it for what your needs are. So if there are certain things that you want me to address, by all means, let me know about those. The training sessions are conducted via Skype. So if you don't already have Skype, you'll want to load that. It's very helpful if you have a headset and a microphone. You could get by with a microphone and speakers, but sometimes the speakers give feedback because there is a slight 1 or 2 second delay on Skype. And sometimes it's a little distracting having a conversation that way. But yeah, short of that, it's your time. So whatever it is you want to discuss, whatever it is you need help with, that's how we proceed. Some people like to make a list of questions. Some people will send me the questions in advance. Some people have specific problems, like they'll say, Eric, I don't know. And sometimes it's very technical. Sometimes they just don't know how to set something up on their charts. Sometimes it will be, Eric, I'm having trouble trailing my stops, or how can I determine which signal is stronger or weaker, or sometimes people will just say, who are non-DTS owners, will just say, Eric, show me how to make money trading. Just as simple as that. Of course, that's a very broad subject, and we might need more than one session, but yeah, it's your time. But they are conducted via Skype, and I will send you my Skype address so you can add me to your contacts. Oh, one more thing. When you add me to your Skype contact, please don't send me the generic message, especially if your Skype nickname is something that I wouldn't recognize, like Tequila King or something like that. If your Skype name has your name in it, okay, I'll know who you are. But I get so many spam Skype requests that if I don't recognize you, I will not accept your Skype request. Neil, having a little computer problem here. He says, I shut it down and loaded it, but why does the cloud filter ATR change when it's reloaded? That's a good question, Neil. I'm having a similar problem here on my Raptor. You see, when I refresh the chart, my Raptor band has stopped working. So what I need to do is I go to the cloud, I apply it, and then it works. But I'm going to have a chat with Ben about that. He would be the fellow to quiz on that, and I'm sure he can get it squared away. It's probably nothing serious. Yeah, Neil says I would have taken the trade here at 903, which is down here, but now nothing is in sync. Yeah, nice little trend change signal. And we did have the test of the extreme, which is always nice to see. Mark is asking about coaching costs and such. Mark, you can find all that information out at that link that I sent you. 1 second here, I'll get it for you again. It's all at Indicator Warehouse. Neil says, do I need to contact him? I was ready to go live and now I'm not so sure. Yes, email Ben, and he is at support@indicatorwarehouse.com. It will not take him long to go through the problem. If any of you are having problems with your software, he's the fellow to contact. It could be as simple as a corrupted workspace, and you just need to rebuild your chart, but he will get to the bottom of it. I guarantee you that. All right, Mo says, it looks like crude oil might be getting ready to go long. Let's go take a look at crude oil. Oh yes, we're getting a possible trend change signal. The workings of it, we did get an early trend change signal right here. We did get a test of the extreme. It all happened, rather concisely there. The early trend change signal, of course, a little riskier. The nice thing about the early trend change signal is, well, you can cover your trade right down here. So we know if we're on the wrong side of this market. It becomes very plain. Now that we did break above the high, this little itty bitty swing high, oh, well, we just broke it. We didn't really break it hard, did we? I just noticed that these little swing points here also coincide with that swing low there. Now, if we end up breaking it like this, then we can expect two moves in the direction of the breakout, and it'll probably do one of these kinds of things. But where it is right now, this may be a test and a retest, right? The market breaks through, the support comes back to retest, and may try to recover the trend and head lower. So a little bit of a decision point here for crude oil. Whether or not they're actually going to make a decision today remains to be seen. Crude oil tends not to be as aggressive in the afternoon. It tends to get fairly quiet. Andrew is asking, have you heard of Bloodhound and would you recommend using this automated? No, I don't know about Bloodhound. And if you're referring to using DTS on a solely automated basis, probably not. Just because, well, you don't need to make a lot of decisions with DTS, but there are some decisions that you still need to make. Namely, well, on a day like today, all the signals pretty much work out, but you don't want to take for the most part, you don't want to take yellow bar signals. You want to concentrate on higher probability signals like first micro macro crosses or macro pullbacks, or where's another one? Well, here's a red bar buy that worked out. So these kinds of things are a little bit more difficult to automate. There were some questions about automation yesterday, and I spoke to Adam about it, and apparently there is an automated DTS style system. However, it jumps through so many hoops that it generates about one signal a day. But it is profitable. So that's the upshot. But no, to automate DTS, like for instance, all right, let's take a look here. So here's our first micro macro cross signal. Prints right here. Is it a high probability signal? Yes, absolutely. If this were a totally automated system, you would buy there, your stop would be set here. What's the problem with that, you say? Well, if it weren't an automated system, I would be telling you, hey folks, we don't have a test of the extreme yet, do we? We haven't seen the market come down here, retest, fail, telling us it is now safe to go higher. For all we know, at this point, this is nothing more than a bear flag, and the market is likely to head lower here. Is this a first micro macro cross signal? Yes. Is it a buy signal? Yes. Should I buy it? Yes. But because of these other factors, I'm not necessarily going to risk it to the stop strategy, and I may or may not risk the full amount. So first thing I might do is dial down the risk amount. Next thing I'll do is I'm going to run a deeper stop. I'm not necessarily going to run it at the stop strategy. I'm going to try to run it down there. If this were an automated system, it would bring you here, it would default to your stop strategy, and what happens? It brings you in, and then it stops you out. So even though this eventually did turn out to be a winning trade, by totally automating it, the computer doesn't know, right? The computer doesn't know, hey, there was no test of the extreme yet, I should run a deeper stop. Whereas the computer between your ears says, yeah, okay, I'll run my stop down here, market brings me in, flounders a little bit, oh, okay, the buyers have control, time for me to start rolling my stop up, and then, you know, I can change the stop strategy or whatever. So that's the problem with the automation part. You don't need to think a lot, but you do need to think a little bit. You know, here's a macro pullback signal. Should I take this? Well, it is a macro pullback signal. But same thing, how am I going to protect myself? Am I going to run my stop right here? No, probably not. It's a little bit too cozy. I'll probably run my stop below the swing point here. Or I'll wait for a second push on the entry. Or I'll just say, no, the market's a little bit too quiet for me right now. Maybe I'll just let it slide. Although it looks like it could reverse a little bit here. I'm with Jim. I think it could reverse somewhat. Andrew is asking, can we take the hawk down to 4 ticks? And if so, have you tried it for performance? Yes, you can take the hawk down to 4 ticks. I know some people like to use different settings. The default settings which we recommend are the ones that have been tried and true. We tested this system for 9 months before we settled on the settings which we recommend. So we did test 4 ticks, we tested 5, we tested 6, we tested 10, and so on and so forth. Honestly, if 1 or 2 ticks isn't going to make that much of a difference, it will generate a few more signals. Where's my data series? But remember too, successful trading is not about generating more signals. Trading is not like a job where if you're in the widget factory and you make more widgets than the other guy, you make more money. That's not how it works. You make more money trading by putting in a larger position on a higher probability trade. Now, I know this is something a lot of people don't like to hear. So here's the hawk now on 4 ticks on the NASDAQ. You'll see it's pretty much the same thing. This macro pullback signal that we were looking on the NQ 6-tick chart is already into red bars here on the 4-tick. But I'm not sure that you really gain anything by watching a 4-tick. To answer your question though, Andrew, no, I have not tested the 4-tick parameters, or I'm not able to tell you what the 4-tick parameters or the results would be. You could run them through the profit finder though, and that would tell you rather quickly what tick size is the most efficient. In fact, if I remember right, Ray, he was the fellow who was doing most of the testing regarding tick sizes. I do believe he was using Profit Finder to determine those results. So here's the NQ now on 5 ticks, which would seem to be a decent number for a $10 or a $5 market. Still get your first micro-macro crosses, still get your macro pullbacks. But more signals, like I say, they don't make more money. In fact, sometimes trading might be the only thing where more is less, where you get more signals, you end up getting worse results. Andrew says, I was thinking of minimizing risk. Well, remember, Andrew, we try to control our risk here, not by setting tight stops. Let's go back here to the first micro-macro cross signal that we were looking at. This is what most people will do. This is what most traders do. They say, oh, I'm going to be a very conservative trader. I'm only going to trade 3 contracts because I only have a $10,000 account. And so what do? They go in and they say, oh, I'm going to put my stop right there. Okay, I'm only going to risk $150 and I need to make twice as much or 3 times as much money because somebody said I need a 3-to-1 reward to risk. So this is what their trade looks like. And they think they're being good traders. The problem is they're strangling their trade. They're not even giving their trade a chance to work out. But they can't conceive of placing a stop down here. Why? Because, oh no, I can't afford $600 risk. And besides, if I risk $600, I need to have like a 3-to-1 reward to risk ratio. So my trade looks like that. That'll never work. Because they don't understand that trading is more about probabilities than something like risk-reward ratio. However, if you control your risk exposures, say to 2% of your account, anything less than 5% is considered prudent. Watch what happens when I place my stop. Here, let's do this. Watch what happens when I place my stop tight. Okay, I'm risking $400. Watch what happens when I loosen my stop. Let's say I'm going to cover below this swing low. Oh, look, I'm still risking $400. What happens if I risk my stop all the way down here? Oh, look, it's still $400. So why would you strangle your trade keeping your stop really tight and risk $400 or losing $400 when you can risk it all the way down here and still risk the same amount? I'm sure you've noticed what changes though is your position size. Here I'm only trading 2 contracts. Here I was trading 7 contracts. But the risk amount does not change. What does change? Well, the position size changes and the probability of the trade working out changes. What are the chances that this trade will find the profit target before hitting the stop loss? 50-50, maybe. Maybe. What are the chances this trade will work out hitting the profit target before hitting the stop loss? 70-30, 80-20? Certainly a whole lot better than running your stop loss really tight. Right? This is how successful traders trade. They give their trade a chance. Don't strangle your trade. It's the worst thing you can do. Well, not the worst thing, but it's up there. For those of you who haven't heard this story, I'll end today's session with the quick little story of a fellow who I was coaching who had a very hard time understanding this concept. I don't know why he did, but he did. And he called me one day in total frustration. He said, Eric, I just lost $600 trading gold. What am I doing wrong? I said, how in the world did you lose $600? I just made $1,000 trading gold. We're trading the exact same market. He loses $600. I make $1,000. What was the difference? He strangled his trades. He never gave the trade a chance. He got stopped out before the trade even had a chance to go to its profit target. Why? Because in his mind, he was minimizing risk. But all he did was actually incur loss after loss after loss because he never gave the trade a chance. Trading is very much like a card game, where if you're going to be prepared to play, like here's a late filter entry signal, if you're going to be prepared to take this signal, you have to be prepared to ante and pay the amount. Now, if that amount is too dear to you, don't run your stop tighter, lower your risk exposure. So now you're looking at a trade like this. Okay, $200, I can stomach that. If the trade goes sideways on me and I lose $200, it's not going to ruin me. But that's me. You know, this is relative to your account. 2% of your account, if you're trading a $10,000 account, would be $200. Another reason why I like a market like the NASDAQ. You would never be able to do this on a market like the E-mini or crude or gold, not for $200. If you're trading a $200,000 account, well, then you don't even need to trade 2% or 1%. You can trade 0.5% of your account and still carry adequate size. All right, so very, very important concept to get your head around. I cannot stress it enough. You need to control your risk. And controlling risk does not mean having a tight stop. Controlling risk means you only risk a certain portion of your trading capital. Very, very important. All right, you guys, thank you very much for your questions and made the time go a little bit faster because the market is not doing anything. If you're trading this afternoon, I don't know. I'm going to go out on a limb here. I'm going to side with Jim and say, yeah, let's see this market tail off. It might not be a huge decline, but maybe back to the lows of the day. Maybe. Gold still heading lower. Crude. Gold heading lower slowly but surely. And soybeans did absolutely nothing today. So I don't expect too much out of that. Okay, you guys, we'll see you tomorrow morning. Bye for now.